QE incoming. Does this mean risk assets could be benefiting from where the market heads in? I'll break it down today. I want to thank our sponsor, and that, of course, is Uphold. This is where you guys can get into your own crypto trading. Well, this is a place where you can do it. Just go over to uphold.com. Use our link down below. You're going to get up to, I think, 20 different options here to stake assets where you can earn yields. Of course, you've got all sorts of assets that are available, over 300 out there. One of the key things that I like about Uphold is their debit card. And this is the one to get. You guys can earn up to 4% in XRP rewards with every purchase up to, I think, 3 months. And then you can even stack rewards by adding in a direct deposit for your pay. So there's all sorts of ways to make Uphold your bank account. Check it out using our link down below. Let's go over to a couple of points I want to hit on. And this is an interesting analysis because this is the credit and liquidity programs and the balance sheet that the Fed is working with. Now, if you look back all the way into 2014-15, that was where we had this slow grind of assets coming in. And then, of course, we all know what happened there in 2019. This was, of course, the last pandemic that we've dealt with. And then, boom, of course, we saw that kind of liquidity coming in. This is the kind of move we've been cutting. And then right here, I want to show you something as I squeeze this down, because this gets really interesting when you start zooming in to 24 and 5. Look at this right here. This might be the expansion of the balance sheet. And if we are seeing that kind of loop moving in quickly in early 2026, get ready, guys. This could be the QE signal that we've been waiting for, where liquidity starts to really pour back into the markets for sure. Job numbers. This is good news in the sense that it is stabilizing. It's the lowest since March of 2021. This is a good thing in general. And I think as we go into the first half of the year, if we can maintain this pace, I think that will be a good position for the Fed. U.S. housing market has reached its most unaffordable level in history. This is a big problem, I think, in housing in general. And as we see possibly rates coming down this year, it's going to open up an opportunity for, if we can get more houses available, for a boom in the housing industry in terms of new acquisition. And you're going to see a lot of refis too, because a lot of people are financed at around 6, 7, and maybe higher percent. If we see a 5 in front of it, get ready, because I think that's going to be a big factor. This was breaking news coming in from the White House, and that is Trump is now banning large institutional investors from buying single-family homes. This is a big deal because we all know this has been a problem that has existed out there where most of this inventory gets sucked up by major investment houses. This, of course, now changing the game. Trump may be onto something big here. We'll see if he comes up with an execution plan that actually works. I want to go to a clip real quick because this gets into the labor, back to the labor topic, and whether or not is decoupling from our current growth. Take a look.
So first, there's a clear signal that the labor market is decoupling from growth. So growth remains really solid, but the labor market is not keeping up with that growth. Job creation is not keeping up with that growth. That is the big dilemma we're having, which is this decoupling. Beyond that, the Fed is torn. You know as well as I do, Scott, that if you're worried about inflation, there's reasons to be worried. If you're worried about your second part of your mandate, there's reasons to be worried. You have federal officials that have different sensitivities, so they're all over the place, and you have no strategic or leadership unifiers in this mix. So the Fed is going to be very divided regardless of what comes out on Friday.
So, I mean, given those tensions that you paint, what do you think they'll do later this month?
So I think they'll do nothing later this month. They're going to remain on hold. They will signal 1 to 2 cuts this in 2026 as a whole. But what I think is the problem is they're not going to give us clear indication of what is the strategic view. Do they, like me, believe that we are on the cusp of significant productivity improvements that bring up the speed for non-inflationary growth? Or will they stay very data dependent and therefore torn between the different parts of their mandate? I fear that we're not going to get that strategic clarity until a new Fed chair comes in.
That's a pretty big statement because when you look at the Fed decision probability in January, it has skyrocketed really from before Christmas. It was basically a 68% no change. Here we are right now trading on Polymarket in early January, and you can see it right there, over 90% on the no change. So this looks to be the case, at least right now, from a Fed rate cut. So the real question is how is this market playing out into January 28th on the FOMC? Do we get a surprise cut, or could something else happen that would push Powell into more of a defensive position, or does he go a little bit more hawkish here with a pause and then signaling into later in the year for cuts? I think the question here will really boil down to who the new Fed chair is going to be. And I anticipate, to stimulate the market, we may see an announcement coming in from the White House prior to the FOMC meeting for January. So it's a critical one to keep an eye on for sure. Tom Lee is hitting on this whole point right here. And this is, of course, dealing with the tariff issue that could be brewing. And he's looking at it as more of a possible contrarian signal. Now, remember that we have the tariff decision coming in from the Supreme Court, and it's going to be coming in quickly. And right now, it appears, based on Polymarket, it is a very low chance that these tariffs hold and that they will be overturned. If that is the case, how does the market respond to this? Is this a positive thing? I think there may be some benefit here from the market in general. The White House has already started to soften their position as well, and I think that starts to play into a bigger narrative going forward. What is Trump going to do to try to keep this as a bargaining chip that he's been using around the world right now? Hopefully it does slow things down, but in reality, the question is really going to boil down to inflation and job growth, and of course, wage increases. That's going to be the big factor that really saves this economy. All right, so you had Morgan Stanley a couple days ago launching ETFs. Now, today, they're getting ready to launch a spot ETF. So this is a big deal. Solana was first, kind of interesting in the sense, but the fact that Morgan Stanley is doing this, pretty big deal, because this validates, I think, a lot of traditional finance, a lot of investors that are at Morgan Stanley that now have the ability to go in and get exposure to that as well. Other things that are good news, I think, for MicroStrategy and Bitcoin is that MSCI has come out and announced that they will not be removing Bitcoin and crypto treasury companies from its indexes. This was a threat that happened early in December, I believe it was, from JP Morgan, who had kind of raised the flag, putting a lot of pressure on MicroStrategy. And of course, this, I think, bails out strategy going forward. So the result will be less money raised through share dilution. And I think that's why we're not seeing markets necessarily going bonkers right now. But let me know what you guys think. Is this going to be a big impact on MicroStrategy and Bitcoin at all, or are we just looking at more of an institutional track record here going forward for crypto? I want to go over to Tom Lee and his analysis on the first few days of trading for 26. Take a look.
Well, it's the start of the year, and I think it's important to revisit the rule of first 5 days. And the rule of first 5 days is that how stocks trade in the first week of the year often is a good directional signal for how the rest of the year plays out. Now, I know many of you might think that this is a little cuckoo, because how can 5 days determine the year? But it does make some intuitive sense. I mean, basically, you get a sense for how the market's appetite is for the year based on how markets trade initially, right? If there's no demand for stocks at the start, what would cause them to suddenly do better? But let's look at the math. Since 1950, there have been 76 years. And the average return for the market is 12% a year. Okay, but let's look at the years where the first 5 days were positive. And that's 49 out of the 76 years. And you can see the average return is 16% and the win ratio is 84%. Whereas if you're down the first 5 days, that's 27 times, then the full year return is only 3% and you're up 56% of the time. So pretty sizable performance difference, 16% versus 3.
All right, sizable performance difference. I'm looking here at the chart between December 31st and the first few days. Up 6, almost 7%. This is Bitcoin right there in the first 5. So we didn't have a good year last year. So Tom, I'm not sure what voodoo charts you were looking at there, but I'm not sure this is going to be playing out again this year. I am actually bullish, though, for the year, and I think market structure is going to be the big narrative here. As long as we don't get into skirmishes, I feel fairly solid we're going to see some upside here. Now, could we see a retracement in the market? Yeah, these are markets. Of course we could. And that, of course, is only going to represent some more opportunities to get in and buy the dip. Tom Lee is doing that right here with Ethereum. Bitmine bought another 105 million in ETH over the past week. Total holdings now $13.2 billion in ETH. This is crazy for sure. They are going to become, I think, number one, because I anticipate they're going to do some acquisitions this year. It's likely going to get approved in their board meeting. And I think that will only grow Bitmine as maybe the number one digital asset treasury company globally, maybe even larger than MicroStrategy. So watch that one. A couple of news points I wanted to hit on quickly was XRP is still planning to remain private. So there was talk of an IPO this year. Ripple has come back in and said no IPO plans for 2026. Now there are some, I still believe they will be going public. The question is really, I think, drilling down to whether or not and when we get the market structure bill. Once that's in place, it's very possible you could see a press release within a few weeks of companies, many companies, that would be announcing going public. So that, I think, is the key for XRP. Monica Long was on here talking about this, that they're going to go in with their strategy to build compliant infrastructure and TradFi and crypto and do all of that in terms of on and off ramps. This is the kind of the thing they've done in terms of acquisition. They've also secured 70 plus licenses worldwide. This will continue to grow. One of the reasons I still like XRP is one of the big ones. Let me ask you guys one thing, and that is inevitably we will see Ripple go public. Once that happens and you have an XRP token that's probably going to benefit just from the buzz itself, my curious question is, would you trade both, or would you split it and say, no, I'm going to go with the stock, or I'm going to stay with the token? Let me know in the comments down below how you guys would trade that kind of situation. I want to go to a clip real quick because this gets into XRP becoming the new institutional darling and why. Take a look.
What's actually been interesting is that during the doldrums of Q4, you actually saw a lot of people piling into those XRP ETFs, which is the exact opposite of what happens with the spot Bitcoin and Ether ETFs, where people really move in tandem with the price of the coin. But it was the fact that it is a way to have a higher percentage jump. So people were buying the dip with XRP in Q4, thinking this is a less crowded trade than Bitcoin or Ether. And then that proved out to be true just in the first 6 trading days of January.
Is it possible that XRP and Solana are simply taking their place as kind of the next cool thing to know about? Or do they have a legitimately different and more relevant use case?
Well, in the context of just looking to make an investment that has bigger gains, you're not going to get that from Bitcoin just because it's already so established. You're not seeing the same kind of percentage moves. But what's fascinating with Solana especially is just that it moves faster. And so you're able to tokenize these funds, move, whether it's a money market fund that you're moving along or some other tokenized asset. It just is more efficient than Bitcoin as a base blockchain, which is why you're seeing more use cases.
All right, so a lot of things to unpack there. One thing, of course, is, yes, I agree in the sense that institutions have woken up to what we've seen with XRP. Will they continue that track over time? I believe they will. But the real question is going to be on Solana. If we continue to see Solana with all the good news that we are continuing to see coming from the markets, you know, you've got Solana now becoming the largest blockchain by market capitalization for tokenized stocks. That is huge. Look at this chart in terms of the growth that we've seen. This can only mean one thing for Solana, and that is it is lagging in terms of price performance. This is due for a breakout. I believe, and I think as we continue to see the good news coming, it is going to continue to load up, and maybe essentially I think institutions will start paying a little bit more attention to this, whether it's the ETFs or direct exposure. You've got a lot happening, including a lot of new income, of course, recording 1.4 billion in network revenue in 2025. That was a pretty big deal for Solana. Huge and up, I think, overall this year will be the question. I think it goes up from here in 2026. We'll continue to watch that. Stablecoin also, the stablecoin supply also, supply surged over 900 million. This is in the last 24 hours. Again, Solana leading the pack here. more reasons that we should see more Solana doing much better than it has been over the last few weeks. And one of the things, if we do get stimulus into the balance sheet, there's going to be two tokens, I think, that really benefit from this. This tweet right here, I think people are far too bearish on ETH and SOL today. L1s are the only net new category we've created in crypto. They broke the trade-off between open source and commercial software. I totally agree with the framework. The problem has always been liquidity. So if Powell starts injecting, these two right here are going to benefit in a big way. Now, most of crypto will benefit, but I think SOL and ETH are the ones that may have the most upside overall. Brian Armstrong is tweeting out here that China has decided to pay interest on their own scratch stablecoin and put in the word CBDC, because that's a controlled token from the Chinese government, the digital yuan. But the fact that they're paying interest on this thing, that in itself is a little bit of a slam dunk, I think, against what the United States has been fighting for, to reduce interest on true stable coins, not the digital yuan, but true stable coins. Hopefully this will hold in Congress and we won't deal with this in the future where banks continue to push against that. But I like the sentiment, Brian. I don't agree with the statement because it is not a stable coin, that's for sure. Jake Cervinsky hits up on this in terms of the market structure. We have a lot of false alarms on market structure. No kidding. I get so fed up with this. And of course, the big issue right now is that we will get a markup next week, or it looks like it's going to happen. Now, whether or not we get it going at a pace in which we get a vote, that's the real question, because I think, just like all politicians, they wait until it gets right down to the wire and then they come in with their more demands or recommendations or needs or wants that slows the process down once again. And then, of course, you're facing another government shutdown issue at the end of January, and then here we go again, which is why I'm really concerned about that. Markup, yes. Vote, I'm not sure January is going to be the month, for sure. Now, a couple of things to kind of hit on in summary here is that you look at QE, there is no doubt we are in an upward trend. And just to go back to, in case you missed that in the front of the episode, this is the move that we are in right now on the Fed balance sheet. This is the kind of number that we could be seeing. Now, granted, if you go back and look at the market, that little blip right there has started to occur just in the past few weeks. So imagine what this looks like in 3 months. That's the thing to take home and look at where you should be in risk assets. Get ready, guys. It's going to get big. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.